Okay. So thank you guys. So I think we can just start. I already started recording. Okay. So well, good evening, afternoon, morning, everyone. Welcome to Crypto Tonight, episode 5. My name is Yama, and it's my great pleasure again to be your host. So tonight we're going to talk about crypto derivatives. It's an interesting topic because half of the time people are incredibly excited about it. They can't wait to unleash the market potential. But then the other half of the time, it's very much the opinion that we don't quite know what's around the corner, and there's a feeling of uncertainty, especially with the suspicious market manipulation and the crazy volatility. One day in crypto is like 1 year in the real world. We had to be more creative and quick response to change. But luckily, I have noticed that we are getting more and more useful crypto financial products, and they are shaped by people and for people. So start with, please join me welcoming our 5 fantastic guests of tonight. And before we kick off, I just want to say thank you to F2Pool for sponsoring this live stream studio. And Chun, the co-founder of F2Pool, is here to quick say hello. Hi, Chun, come here.
Hello everyone. Yeah.
Hey guys.
Hello.
Hey.
Have fun, maybe?
Yeah.
Maybe give us some wishes.
Just a welcome. Yeah.
Yes.
Yeah, you're welcome.
Thank you.
Well, so thank you, Chun. So F2Pool is happy to do whatever they can to support us. Thank you,
sure.
Chun. So first brief introduction. Maybe start with Emmanuel, the CEO of SKU.
Yes, hi everyone. Thanks for having me. I'm CEO and co-founder of SKU. We do data analytics and execution for crypto markets with some focus around the derivatives in general.
Okay, very brief. Congratulations, Emmanuel, on your new round funding and also your launch of your skill trading. And data trading, I just want to tell Emmanuel that you actually have a huge admirer from China. Sorry, it's not me, but I'm becoming. We're going to reveal later in the show. Now moving on to Sam, the CEO of FTX.
Hey guys, great to be on. My name is Sam. I'm the CEO and founder of FTX, which is a crypto derivatives exchange.
Thank you, Sam. I know you actually have donated over 7 million to charity to help developing, for example, malaria vaccine. I also know you study physics, maybe an expert on string theory. I couldn't really figure out. And really,
I wouldn't quite say that.
And I really admire your ambition to have positive impact on the world, and you are doing it. And little question for you: if you had to choose another career, what would it be?
Yeah, it's an interesting question. I mean, I was almost working in the charity sector, and almost did that instead of starting up Alameda Research a few years ago. So I guess that would be sort of the backup.
Okay, that's interesting. It's very different from being a trader or entrepreneur. But I think life is beautiful because of varieties. Thank you, Sam. Now moving on to Luuk, the CCO of Deribit.
Hello, thanks for the introduction, and thank you for hosting me or us. I indeed work for Deribit. We are a derivatives platform, particularly known for our options space. So we have around 85-90% of the options market measured in OI as well as volumes, and that's what particularly attracts new clients to join. Besides that, we also offer trading in regular products like perpetuals and futures.
Thank you, Luuk. At least we aim for better audio quality and punctuality this time. And I can guarantee you the host me won't be gone during the show. Remember that, Sam.
I will. Thanks.
Derivatives Bitcoin, Deribit, is the #1 exchange in option trading today. You actually have many fans, actually too many fans in China. And we are going to review 1 or 2 later in the show. Now moving on to Michael, the CEO of Amber.
Hi everyone, my name is Michael Wu. I'm the founder and CEO of Amber Group. Amber Group is an integrated crypto finance platform. We help our clients buy, sell, access, trade, earn, and invest in cryptocurrencies with one product. We hope to service all the clients with our institutional level of crypto financial products and crypto financial services.
Thank you, Michael, for being with us again. I love Amber's Brother Sisters podcast, Leslie and Annabelle, and it's so nice to see more and more female crypto experts, especially from Amber. Thank you.
For sure, we should have you on our podcast too.
But I'm not Amber.
Maybe one of the future episodes.
Okay.
For sure, I mean you're definitely invited.
Thank you. Now moving on to Shiliang, the CIO of LedgerPrime.
Yeah, thanks for having me. So I'm the CIO of LedgerPrime. We're a cryptocurrency quantitative hedge fund, been around since 2017, mostly focused on derivatives. So my team and I come from traditional assets, and we're just putting over a lot of the same kind of automated trading strategies over to crypto derivatives.
Thank you, Shiliang. I actually hear many interesting things about you, like in BlockFi, like to watch Crypto Tonight, episode 1. Half BlockFi team asked you to be their WeChat inviter, and I'm surprised your account is not banned yet. But anyway, you're our hero. Thank you, Shiliang. So happy to have you here.
Of course,
finally.
Thanks.
Yeah. So thank you also. I think now we are moving on our next session. We have invited a few special Dail-in guests to say hello and ask a few questions. So guess who's the first one? Of course, our old friend, DC, the CEO of Hashkey Capital. Hi, DC, are you here yet? Hi, DC. Hello, DC.
Hi, I'm here.
Hi, finally. So DC, I have delivered my promise. So I have invited your favorite skill. So now you may introduce a bit yourself and then ask your question.
Yeah, hi. This is DC again from Hashkey Capital. Thanks, Yama, for the opportunity again. Congratulations to Skills for racing around and your plan to launch your trading products. As Yama, you may know that Hashkey as a blockchain VC, we are more focused on the primary market. However, our research team is a frequent user of Scoot, and I know many traders and researchers in the community. They speak very highly about both Scoot's professionalism and the user friendliness. We see Scoot as a critical part of the crypto financial infrastructures, which is one of our investment focuses. So my question is related to market participants. We understand the derivative market is more for sophisticated or institutional investors. Well, the reality is that the crypto market is still by and large dominated by retail investors. So my question is that what do you think are the major barriers or concerns that stop sophisticated or institutional investors from participating in this market? And what is your plan to onboard them more easily?
Yeah. So, thanks a lot for the kind words. And, that's great to hear that you guys are using the product and like doing so. I think, when you look at, crypto markets until 2017, I think the roots of crypto markets are primarily with a retail audience, and there are a lot of good tools and very great companies that are kind of servicing these types of customers. I agree that the kind of institutional market is still of a relatively small size, and that's why we can enter the space and prepare and build the right products for this side of people. I think over the last 2 years, you've seen a lot of change in market infrastructure, and the good news is that there are a lot less barriers, I would say, to entry for this type of customers. Now, those are kind of usually, larger institutions, much more process driven. There are a lot of kind of, stakeholders for making decisions of entering, new asset classes like Bitcoin. So this conversation do take a bit of time. I think what we've been seeing is they are usually helped by kind of macro catalysts. So last year we saw a lot of engagement from the traditional investing community around Libra and Facebook launching Libra. So that was in June last year, and that's where the market kind of peaked. This year in January, we saw again a lot of engagement around the CME launching the Bitcoin options product. So that was another occasion to kind of revisit the space. In about a week or so, we are having the Bitcoin halving. That's also an interesting thing to kind of discuss. But I think, overall, this year is very macro driven. We've had like a very sharp and unexpected event with the COVID crisis, and that's changing a lot of kind of the macro investing landscape. And I think a lot of us in the space think that Bitcoin is digital first and it's scarce, and so it's got a lot of good things for himself, and should be seen as one of the beneficiaries, I would say, of the new paradigm of investing. So yeah, I think there's a good story to push this year, and we are seeing more and more inbounds and interest, and we see that in terms of the signups and the kind of companies that are looking into our dashboards, and that we are not doing so only like a couple of months back. So I think it's to get back to your question, the major barriers, I think there are a lot less. Those conversations take time, and they are helped by major catalysts, and actually we believe there is one now. It's prime time for Bitcoin when the scarcity, the digital aspect. There is like a very compelling story here. So I think it's kind of our job also as a community to push hard this story and try to build that adoption. I think it's like one example is what happened with the gold futures at the CME. You've had like those futures are physically delivered, and because of the crisis, you've had a lot of issues with physical delivery in New York and all sorts of like discrepancies in the market as a result. And so it would be very convenient that those goods were digital, and I think it's what Bitcoin is. So there are a lot of interesting angles this year that should be pushed for sure.
Thank you.
Thank you. So thank you, DC, and thank you, Emmanuel. So actually, DC, little question for you. So what's your favorite website? Please don't answer skew.com. Okay, joking. The real question is, how do you think Hashkey and Skew can have more to do with each other? Also, Emmanuel also mentioned, they are probably interested in also entering the mining space. And in China, there's more than probably 70 or 80% they are like kind of like mining, and also institutions. So what do you think?
I think. Yeah, I mean, our goal is that we want to build a gateway to the crypto markets. We don't want to be building, the custody infrastructures, the clearing infrastructure. What we want is, a product where people can track the markets and monitor them, and also, get access to the products. So that's the idea of what we are doing. I think on the mining side, I'm not at all like an expert in terms of Bitcoin mining, but what I've always been, what I've always been, surprised about is that there are a lot of discussions around having the best kind of energy deal and managing the cost, but not as much on managing the output and how you kind of can do risk management on the coins that you're mining. And I think there are a lot of techniques that are being used by commodity hedgers in traditional markets. I think the most well-known one is the national company of Mexico, which is hedging, which got like a very extensive hedging program for its oil production, which was quite a good thing to have this year. But I think there is a lot of teaching and education on what sort of products and how you can have like better risk management, I would say.
Yeah, nice. And DC?
Yeah, I see a lot of potential. There are two just like pop up in my mind. One is that I heard the news about Skew's recent successful round. If you guys are still open for investment, we just to discuss either this round or
the next time.
Next round, reserve.
Secondly, we have several portfolio companies in the space. I see there are potential synergies. Would love to connect you guys with them and explore partnership, collaborations, etc.
Thank you.
Yeah, sure. Like, shoot me a note after this call, and
I will connect you later, guys, on Telegram. Thank you. Thank you, DC.
Thank you.
Thank you. Bye. Thank you. Bye.
Thank you.
Thanks. Bye.
Bye.
So,
Bye.
Thank you.
thanks. So next, our surprise guest is a good friend from London. Hi, Leon from Genesis Capital. Hi, Leon. Are you here yet? Hi.
Hi guys, how's it going? Great to be here with so many top names in the space.
Hi, Leon. Hi, nice.
Hey. So great. So I'll get to it. So my question is for Sam. So at Genesis, I think we've spoken to probably everyone on this panel so far. So just first of all, great to say hi to you all. Sam, just 6 years ago, you were at MIT doing physics. Now you're the CEO of one of the leading derivatives platforms in crypto. It's pretty astonishing, to be frank. You've also got experience trading at prop firms like sort of Jump and your own prop firm previously. And so I was particularly keen to ask you something, not about any of your particular products, not BVOL, but from an abstracted level, and this is a sort of hat tip to Peter Thiel here, what important truth about crypto do you believe that very few people agree with you on? And when I say very few people, that's the reference set of folks on this call.
Yeah, that's an interesting question. And, there are a lot of things that I think a lot of people disagree with, but this call probably agrees with. And so I won't go through sort of non-conspiracy theories about Tether or anything like that. Yeah, so what's something that I probably disagree with, people hear about? I mean, and again, I don't know what everyone here thinks, but I think that crypto will sort of, my best guess is that it needs to get legs at some point in terms of, whether that's building out use cases. And I think sort of what passes for like a use case in a press release is a little bit light. I think use case often means like some crypto company tied the word ether to some real world object and then tried to raise money on that. And so I think something where crypto is actually necessary or helps the product a lot, or get sort of governmental adoption from some countries at some point to sustain growth. And that sort of, there's a limit to how long the world can keep paying attention to crypto without it starting to kind of take part in people's daily lives. And so, I'd be super excited to see those built out, anything from payment processing to, official backing from, governments who don't like their current currency, to, anything else, to being the rails for actually important things. But I think that most of the time that people say, oh, let's do it, well, but on the blockchain just makes it worse. Like, people just take a lot of things where a centralized database is obviously what you want and try and replace it with a decentralized database, and it just isn't the right fit.
Got it. And maybe just one sort of quick follow-up there. What is, from the list of items that you named, what is your most likely candidate for something which actually does have legs?
So I think the most likely short-term thing is things like remittances. I mean, we're obviously already seeing some activity there from some countries, but I think there's a ton of rails that crypto could be an important part of, but currently isn't. And it's sort of way overrepresented in a few particular rails. So I think, you could see it really growing in the remittance business. And I think payment processing is another obvious one. And you can just look at the amount that things like credit cards take. If you just replace the 4% or whatever that credit cards take off the top of transactions, maybe that's a little high. I actually don't know how much they take on all transactions. But if you just take that and multiply by credit card volume, you get this massive number. And so, I think those are sort of obvious places. With the wild card of some hyperinflating, some country with a hyperinflating currency that says it's time to start over, deciding they're going to use crypto for their next currency. And so I think that's not super likely, but it's possible and would be huge if it happens. And outside of that, I think remittances and payment rails are sort of the most obvious first cases.
Thank you.
Thank you, Leon. You are actually supposed to be a surprise guest to Sam until you private message him before the show. What else can I say? Next time, you're only allowed to speak Chinese in the show, okay? 不要，谢谢。
Thank you, Yama.
Thank you, Leon. Okay, thank you. Bye.
Take
Thanks.
care. Bye-bye.
Bye.
See ya.
So now moving on to finally someone closer from Beijing, market maker Harry, the COO of CyberX. Hi, Harry. Are you here yet? Hello, Harry.
Hi.
Hi, Harry. Hi.
Hi. Can you hear me?
Yes. Maybe you can intro a bit yourself and then ask your question.
Cool. Hi, everyone. My name is Harry, and I'm the CEO of CyberX. CyberX is a prime broker in crypto space. We're offering a variety of prime broker services, including trading execution, OTC lending, and spot and derivative market making. We have a team of talents coming from Wall Street banks like Goldman Sachs, UBS, Merrill Lynch, and funds such as Citadel, AQR, BlackRock, and GSA. In the past few years, we feel very lucky to see many of our clients, such as PayPal Finance, Cobalt Wallet, and the Bybit that we serve in their very early stage have been growing into top-tier firm in the industry today. We would love to get more connected with everyone here today, and let's make more interesting thing happens in this industry. Today I have a question for Luuk. Deribit is the company we like very much. It has been growing very steadily and it's very trader friendly with features that you probably can only find in Deribit. So my question is, we see 2019 is a tipping point for derivative tradings, especially for perpetual swap and futures. Their trading volume has reached as high as probably 19% in many top-tier exchanges. We know option has been in the market for quite a while. It has been growing slowly with majority of demand coming from miners. So my question is, when do you think will be the tipping point for the option market? And what do you think will be the catalyst for us to approach that point?
Good question, thanks, and good to hear that you're positive towards what we try to build. I think especially related to the options segment, we've seen a decrease of volatility the second half of last year, while option volumes remained stable. So we didn't wait, we approached new clients, we connected lots and lots of them, while the market didn't really justify buying or selling the products themselves because of the absence of volatility. What we've seen since, let's say, 1st of January, is an increase in volatility again, naturally peaking mid-March, but we've seen growth month on month since the beginning of this year. That's seen in all the products, but especially in options, because volatility drives the use case for options. So we see demand growing from a variety of angles, and it's not only miners. So actually, it's the opposite. There should be many more miners using it, and miners are only a small set of the use case thus far. So naturally, if you look at the every trade, which is different for futures and perpetuals versus options, on one side of the trade there would always be an options market maker. That's not a requirement, but that's simply the way these products are traded. So on the other side, it would be either retail, it would be institutional prop traders, or the actual, let's say, buy-side traders. And the latter would be, in my view, the group that really drives growth. And as institutional demand is growing on our platform, but on all our peers as well, the use case for traditional financial products like options is growing. So that's what we see. We see a lot of traditional firms joining, and which have a Bitcoin or Ether strategy, which they're building amongst others with options. So naturally it drives futures, naturally it drives perpetuals, but the longer term exposure measured in OI, for example, is growing. So what we've seen is, of course, a market crash mid-March, but we're reaching those levels again. So the market is quickly recovering. Overall, at Deribit, we're about 1 billion in open interest today. So that's options as well as futures, perpetuals in BTC as well as ETH. And this is only the start. So you see CMEs getting more active the last days. I think we'll see growth like this on all the options platforms, hopefully dominated by us, but competition is good, of course, which will drive the market further. So, and if I may add one last statement, the remaining aspect, which requires a lot of time, is education. So the traditional firms will join regardless. It can happen tomorrow or next month, but at some point they will join. But a lot of firms are simply not really used to trading options yet. So you refer to the miners, and that's a typical group which needs to be educated further in order to better understand the benefits of hedging their income using options. So if you look at oil was just mentioned, or gold, those are the typical use cases for derivatives. In the traditional world, a lot of those volumes are driven by those kind of firms. In crypto, it's not. So we see a lot of potential volume gains there. But that requires time and a lot of effort and also personal engagement. So options are more complex than regular perpetuals or futures. So it simply needs more time to properly educate the market.
Yeah. Definitely. I think the mining space, they need really more education. For example, Chun, he doesn't believe in any crypto financial products. So even though we're doing the show in his studio, he still doesn't really believe it. He's sitting next to me now. Anyway, okay. Thank you, Harry.
Okay, thanks, Yama.
Thanks, bye. Thank you.
Thanks.
Next is a new friend from Shanghai, Sonic, the COO of CCFOX Exchange.
Hello, everyone. This is Sonic, CEO of CCFOX, and we are a derivative exchange backed up by FBG Capital and teamed up by traditional financial broker and stock exchange technicians. We are offering perpetual swaps for both forward and inverse contracts, taking USDT or Bitcoins or Ethereum as collateral. And we're also going to launch our mining derivative products in the next few months. Here's the introduction. My question is for Shiliang. I heard good things about you from Yama, and as we are a derivative exchange, we are actually looking for market makers all the time. So we have been seeing third-party copy trade or the shared strategy trade softwares, or even some exchange has been equipped with the copy trade functions that has been popular at this stage. And as a market makers, which is a liquidity provider, have you ever experienced challenges in those situations which LedgerPrime is a dedicated market maker in some platform, which in some cases the order book mostly become sometimes one-sided? And how could you manage to hedge them and providing sufficient liquidity? Thank you.
Thanks for that question. So copy trading or mirror trading or social trading, I guess has been around forever in traditional assets since like early 2000s. It's for those who don't know, I guess it's basically a system where traders can share their own trading signals or ideas live, that others can follow manually or algorithmically. They think it's a profitable signal. So it's highly popular in the FX world or stock trading world. Group leaders, Yahoo Finance chat rooms, as we all know, have been around forever and pumping and dumping stocks. I think nowadays, eToro is probably the most well known for traditional assets in crypto. In crypto, you have eToro, but then you have various flavors like paid groups, leaders, and Discord, Telegram groups. You obviously have, Sam can speak to this, but FTX is Quant Zone, where you can backtest strategies and allow others to copy and earn a fee. But essentially, one is, all alpha, degrades to a certain extent. So, as you scale it, right? And so just because one signal, one strategy that you see from, some copy trading group or individual, comes out and it's profitable, doesn't mean that it can scale and remain, profitable when hundreds of people, start to use it, or when other firms, start to use it, right? And so, as a market maker, what you're more worried about is less about strategies that are public or used widely by many firms or individuals. I think what you're more concerned about are the actual strategies that are developed in-house and kept in-house and that are hidden. I think those are definitely more toxic than these strategies or signals that become more public over time. And then second, as a market maker, we're constantly doing toxicity analysis and trade reports, right? So, unfortunately in crypto, there's no like level 3 order book data for the most part. As your designated market maker, you're not, getting exchange reports on a daily basis like, we were as an options market maker from the various exchanges in terms of, who you were trading with, who your counterparties were. There's no like PFOF, like payment for order flow, where you know exactly what group of kind of traders or retail traders you're trading with. But at the same time, we're still doing analysis on the various exchanges where our trades for the most part originate from, and we can always adjust our spreads and sizes and behavior based on the platforms that we're dealing with. And so certainly it's an issue, but at the end of the day, it's just one factor in your kind of market making system, and so we're not necessarily too concerned about it. And there's various ways that we can mitigate it.
Thank you. I think for Amber is also quite active in trading, so maybe Michael also has something to share with us.
Sure. Hi. Yeah, I mean, as Shiliang said it very well. I mean, market making is about managing all kinds of situations in terms of liquidity, right? There are sometimes there are too many market makers and too much liquidity, so you try to compete for attention almost, and try to get your orders filled. And there are also moments where the market is thin or the market is very volatile, where there's a shortage of liquidity and everyone's competing for liquidity. In those moments, it's really a matter of how sophisticated your risk management can be, how fast and stable and robust your trading infrastructure can be, right? And as a market maker, you got to manage all kinds of different situations. And for new exchanges, or especially new derivatives exchanges, there is a need for market makers to get them over the initial hurdle, right? But over time, hopefully, the natural two-way flows take over, and the liquidity can be more organic and generated by players within the ecosystem themselves, with the market makers constantly being there as almost like a backup plan, a backstopper to provide liquidity when it's really needed.
Yes. Thank you. It's so what an insightful conversations between expert traders. Thank you, Sonic. Bye, Sonic. Thanks. Bye. So next, our dearest friend Kevin, the CEO of Poolin Mining, who doesn't need any education about crypto finance. So Kevin, are you here yet? Hi, Kevin. Hi, Kevin. You're mute.
Hi, everyone.
Kevin. So Kevin is the CEO of Poolin Mining and one of the largest mining pool today. Poolin mines around 10,000 Bitcoins per month, of course, before halving. So Kevin, now maybe you can introduce yourself and then ask your question.
I founded Poolin about 2 years and 2 years ago. After I quit Bitman, I got involved in Bitcoin industry about 2012. So 80 years in this industry. I did a lot of stuff like I built 7 years ago. I buy chips from Fried Cat to try to build my own mining rigs. Then I built up off-chain wallet and the Temple, my first mining pool. Then in the bear market, I closed my company and then joined Bitman. After 2 years worked there, I quit Bitman about 2 years and a half ago. Then I started up my own brand, Poolin. Poolin right now is a multiple coins mining pool. In many coins like Bitcoin, Litecoin, Zcash,
and more.
And we got number one or not to market share. We have close to 1 million miners on our platform all over the world. And right now we are trying to make some change because there's lots of competition in this field. So lots of exchanges, they are joining the mining pool business. So we try to find our own space. We are trying. We do some research on the financial tools recently, especially options. We found options is very useful for the miners, because they need to they always mine new coins, and they need to sell a part of them to get electricity cost.
That's why you have a question for Luuk, right? I said that's why you have a question for Luuk, because you mentioned options.
Yeah, we watched Deribit for months. Hi, Luuk. What measures you are going to take to face an extremely fluctuated market? As I know, lots of institutions now using your service and hold a huge number of positions. When volatility sparks, how to solve the problem too big to cut off? And would you ever think to provide some facilities in order to lower risks?
Good question, and thanks, and good to know that you and your fellow miners taking the options opportunity more serious at the moment. The volatility we've seen mid-March is perhaps something we'll see in the near future again. Perhaps halving or other events might result in extreme volatility. What we've seen mid-March is a clear test of our risk systems, and we've implemented a few changes since. I think for one, it's good to understand that we have two types of client setups. One is a regular client. So if you buy an option, you pay for the full premium. So let's keep it simple. If an option is $10, you pay $10. If you short an option, it's a margin product, so you have to pay margins. But if you buy it, it's a simple product. Those clients, so let's say they're shorting options, and at some point the market moves against them, we would liquidate their option positions. So overall, these are smaller clients, so small positions. We have to automatically sell a few options, and our market makers provide ample liquidity to facilitate those in any kinds of market circumstances. So we have 10-15 options market maker active, and the liquidity in the books is more than sufficient for those automated liquidations. If you look at the bigger clients with more sizable exposures, and I think that's the ones you're referring to, those would be typically portfolio margin clients. What that means is that we would look at the full portfolio instead of the individual legs, meaning we would look at all the options, we would also look at the futures, the perpetuals, everything within a single account. If the market changes, for those clients, we would not touch the options positions, we would delta hedge. So what we've seen in the mid-March crash is that our system would buy or sell a lot of futures or perpetuals to make sure that the position is delta neutral and therefore can face the moves in the market. At some point, if equity is not sufficient to cover margins, we would sell the entire position of the client, which would resemble a liquidation like any other market. So which measures have we taken? We've changed a few technical procedures in liquidating. We've injected additional company funds in the default fund, so in our insurance fund. We've grown it to protect it from larger moves, which could potentially empty the insurance fund. And I think we've proven that our system works, for one, and secondly, that we can handle extreme volatility. So over time, of course, the insurance fund will grow, so the protection measures will become more robust. We will keep developing our portfolio margin solution. So even though we think it's rather advanced, of course, there can always be tweaks to make it perform better. And we could look at other stuff like other types of collateral besides BTC or like stablecoins or cross collateral, that kind of stuff, to make better use of a client's full position instead of only the respective coin. Does that answer your question a bit?
Yeah.
Does Deribit have a plan to bring more OTC flows on floor? In this case, we may lower trading costs. Not to mention, we are likely to find out flows on volatile market. And a small question is, will you provide options month by month? Because the miners, they sell coins month by month.
So your first question is OTC flow. Yes, we would welcome OTC flow. Depends on what you mean. We have a partnership with Paradigm. I think Anand has been in the show before. We are keen to onboard other IDBs or other types of brokers matching outside of our platform and then reporting to us. So we have a block trade API, so you can report trades on an automated way. We have a new UI where you can do block trades yourself. So you and your friend can trade with each other and report via block trade functionality to Deribit. So we are keen to further build the OTC space because it's a big driver for growth. The blocks are bigger, and the necessity for outside matching is important for those type of firms. Your second question is, would we list options month by month?
Yeah,
not completely sure what you mean, but we have an introduction schedule which describes the introduction policy. So we have 2 months typically. So every month there's the current month and the next month. So the front month and the next month. Futures we have longer. So futures we have up until December. But the options we have the 2 front months and then the natural the regular quarterlies. So we would have September, December, etc. Yeah. Is that what you mean?
Yeah, almost.
So anyway, thank you, Luuk and Kevin. So I think, like Kevin mentioned, big exchanges like OKX, Huobi, Binance all launched their mining pools and option trading, OTC lending, and so on. They're trying to be all things to all people. How do you feel about it? This question is to Sam and Kevin. Hi, Sam. Maybe Sam first.
Yeah. Yeah, so the question was about like OTC.
Yeah, like big exchanges they're offering to all. So how do you feel about this? For example,
yeah. I think that, really in the end, the biggest thing is to build the products that people want. And I mean, it sounds sort of silly, but I think that is definitely big. And I think that becomes bigger over time. And I think maybe one underappreciated sort of thing about products is if you're the first to a space, if there's just sort of been nothing there, and you sort of found it, you can often get away with just building whatever. And I think that's sort of the original design of BTC perpetual futures. I think they're really cool products. I think there are a lot of things about the design of the earlier ones that are completely insane, and sort of no one would do if that's how they were building them today. But because there's just no competition there, that was all that there was. That's how they were built, and then everyone sort of got used to it because again they didn't really have a choice. But as spaces get more mature, I think it becomes more and more important if you actually want to roll out a product that's going to have real adoption, for it to really be exactly what people want. And so I think that when you start looking at more complex products, everything from OTC derivatives to sort of boutique derivatives. You see a lot of people talking about, hash rate futures or, Bitcoin dominance futures or a lot of other things. I think the default thing is you build a project and it dies. And if you don't want that to happen, you have to really make exactly what people are looking for and make it be the product that people want. And so, I think that for OTC spot trading, as an example, there's a clear need there for people who basically have some, they need to hedge and they need deliverables, they need fiat support, and they don't want to deal with settlement, everything in real time. And so, it's important to have a platform that supports that. And sort of think about what features exchanges don't have that they want from that. I think when you're talking about OTC derivatives, the first question that you have to answer is why aren't they just sending a market order on an order book? what's the goal of this product? And I think that there are reasons for that. I think often you'll look at an order book, like obviously you're not sending a market order for a large size on that order book. That'd be insane. That order book just cannot support it. And so then you have to think, well, our reaction have more liquidity OTC, will it print? And then what's the UI for this supposed to look like? And that's going to trace down to who's using it and why. And so I think, a similar thing when you're talking about more complex derivatives or things like hash rate futures, which I know come up a lot. We started thinking about that a lot recently. If there are any miners who have interest in hedging products for their mining, I'd be super excited to have a conversation with you guys in the next week or two, because we're going to try and build some products for that. But we want to make sure it's exactly what people want and not sort of, has the right catchwords but doesn't quite exactly meet the design specs. And so I think that's really the biggest thing to think about there is exactly what product are you making? Is that exactly filling the need that people actually have? And, once you have that, are you going to actually find the audience for it?
That's why you actually have to fly to China after the virus to meet all the miners here. But now you can be one like Kevin. Yeah. So Kevin, what are your thoughts?
You mean the exchange? They all joined the mining pool.
Yes. How do you feel about it? Yeah.
Yeah. If they have good price, we may sell to them. Just kidding. Yeah, it's very hard. The competition is very very hard. We may impact on mining pool business, but the impact is for us it's limited and foreseeable. Exchanges, they have capital, they have resources to make vertical expansion in this industry to build up their own closed loop. So they want the miners mine new coins or go to the exchange, so they can have lots of product to get profit from these new coins. But we have to the mining pool for many years. We have our own advantages, like number one, we have good reputation and best mining technologies. About 3 years ago, I have open sourced the mining pool in the production environment. So many exchanges, they build their own mining pool on the open source project, but we have our own better technologies for many years. Number two, we stayed with miners for years, so we have built up mutual trust for the clients. We know each other for many years. We are eager to number three. We are eager to make exchange, just like we are doing now. We using financial tools to help miners flatten the impact of the price movement, including using options. We are trying to build some products for the miners.
Yeah. So changes.
What's your view? Can I ask a question?
Sure, Emmanuel. Yes.
Yeah, Kevin, what's your view on the Bitcoin hash rate and how it might do post the halving, because it's been rallying quite a bit into
a few days away,
even next week.
The hash rate, the whole network hash rate may drop 20% to 30%, but it still depends on the price. If the price keeps like 8,000 USD, 70% hash rate is in China, and by the end of May this month, in Sichuan province, the flood season is coming. So the electricity cost will drop from 30 cents yuan to 20. The electricity cost will drop like 30%, because they move miner from Xinjiang province to Sichuan province.
The rainy season.
In the dry season, Xinjiang province is holding half miners rigs in China, and in the flash season, half is moved to Sichuan. They are like the birds in the winter and summer.
Miner birds.
My prediction is maybe 20% hash rate will drop.
Okay. Thank you. So changes, challenges, and opportunities. I know Kevin now is actually on a business trip in Chengdu, so we won't keep you stay longer here with us. So you can go ahead, have fun drinking, and with the miners or maybe karaoke. Thank you, Kevin. Thanks. Thank you, Kevin. Bye. Bye. Thanks.
Bye.
Thanks.
Bye.
Bye. So now back to Phi. So moving on to our final discussion tonight. So the biggest market today is Bitcoin against Tether. So in your opinion, what's the price or value of Bitcoin, especially with the third Bitcoin halving, as Emmanuel mentioned, just a few days away, and how the crypto derivatives is going to impact the market or getting impact as a whole later in 2020? Maybe start with Michael.
Sure. The first question is on the price prediction, or?
Yeah. The price is like, what's the price of Bitcoin or the value of Bitcoin in your opinion? Tough question, right? Actually, I read it from one of Emmanuel's article. Actually, I think it was a CoinDesk article.
Yeah. I mean, to be honest, right? I mean, the only very clear thing I hope everyone on this panel agree. Is that long term we still have a lot of room to go in terms of price, right? Bitcoin is, I won't be surprised at some point in our lifetime for sure. It's $500,000 each or $1 million each. I definitely can see that happen in our lifetime. But when, it's the hardest question, right? Timing is the hardest. I don't know. I mean, to be honest, a lot of expectations have built up into halving. Since we are, so very close to it, and since we just had the huge recovery from the big drop on March the 12th, I believe there are a lot of factors supporting the price right now, at least into halving. After halving, I think that's where opinions started really diverge. Some people think we are in a bullish year from here, but many others think actually the classic buy the rumor, sell the news will happen. So market will correct back lower after halving actually happens. I mean, as you know, Yama, we at Amber never bet on directions, neither the timing. So we are just here to provide any tools, any services, any products our users, our clients actually need. Whether you're bullish, whether you're bearish, whether you're onshore but you want to hedge the risks, you want to play the volatility side, you want to use some option structures, or I don't know. I mean, whatever you want to do, we'll figure something out for you.
It's the same like what Sam already also mentioned earlier. So what are your thoughts, Sam?
Yeah, so as Michael said, I don't know what's going to happen. I mean, I'm just kind of bullshitting here. You've so far seen a lot of things that a lot of people predicted would happen, in fact, happen. Which is that going into the halving, we've seen prices go up a lot. Certainly, that's something a lot of people thought would happen, and in particular, we've seen Bitcoin outperform other tokens, which is sort of something you might expect. Also, given that this is sort of a Bitcoin event more so than a crypto event. And so, that I would say is just sort of not shocking. And is, so far it's been playing out as people expect. There's certainly a part of me that thinks of the, by the rumors sell the tweet or whatever, where, you look at what happened when CME futures listed as sort of an example of this. Bitcoin went up 5x in the few months. Going into that, they listed that was the peak. The day Bitcoin CME futures listed was like the all-time high for Bitcoin, and it was just downhill from there. And we've seen a few other things like that. And so I wouldn't be shocked to see that, especially locally. But the Bitcoin market can be weird and momenty. And I think one thing in particular, as you bring up derivatives, liquidations can play a big role in this. And so, I don't know what people's positions are. I think, you look at the exchanges with the highest open interest and say, what's going on there? Are there a lot of people who have a giant leverage position on that's going to blow out? And if so, that can create sort of positive feedback loops locally. And so, we've historically seen that downside much more so than upside. Especially, I think, given that a lot of exchanges are using Bitcoin collateral for Bitcoin futures, so as things crash, the collateral is crashing too. But that's certainly something that you could imagine creating momentum through happening. And on the flip side, I think you could imagine a lot of people who are buying right now and planning to sell right after. And if that's what's going on, then you expect it to give up some of the gains, right after. And overall, I think you sort of expect derivatives to make this play out a little bit more efficiently unless you see liquidations. The default is you'd expect, because people can get leverage because they can short and long, that means everyone can sort of express exactly what their opinion is, rather than you only being able to express your opinion between 0x and 1x of your portfolio size. And so you sort of expect more opinions to be more taken into account. But on the flip side, you get the world all expressing the same opinion, and then they all blow out and get liquidated, and it's a massive shit show. So, there's definitely two sides to that coin.
Yeah, thank you, Sam. So, what are your thoughts, Emmanuel? Because you also launched your new trading platform. So,
yeah, I mean, in markets and options trading, we like Catalyst. There is a big one here that allows everyone to kind of revisit the story, getting some of the mainstream attention. So that's good. One thing that we noticed is that Q2 is always strong for Bitcoin prices in general. There is definitely, I'd say, like if Bitcoin was more of like a traditional, more mature asset, I think there definitely could be some travel and arrive kind of setup. But yeah, I think crypto is actually not that efficient in terms of markets, and usually you get a lot of attention and build up into events, and then you set up. The thing also about the halving is that it's not really a market event in the sense of what market events are. So market events, in my opinion, are binary events where if X occurs, then we go down 20%. If Y occurs, we are up 20%. So I don't know, like the Brexit vote or the US election, those are binary events, and based on the outcome, the market will go up or down. Here, we know exactly what's going to happen, so it's not really like a binary event from that perspective. So yeah, we'll find out, I guess, pretty soon.
After next week. What are your thoughts, Shiliang?
I think I agree with what Sam said earlier. I think derivatives obviously plays a huge role. I mean, derivatives wasn't nearly as mature during the last halving, and so as a result, I think a lot of structural issues that result of people positioning with derivatives is potentially can have a huge impact on the price movement of around halving, right? Whether they're lever long or lever short, as we saw back in March. So, personally, for us, we don't necessarily play the price. I think more interestingly, that we can kind of play are, in the derivative space in terms of, specifically, let's say options, what the market is implying in terms of the event, what, downside puts versus upside calls look like. And so we're mostly playing more of a probability perspective as opposed to, trying to predict, what the price necessarily will be, before or after. And I think the market is much more inefficient from that perspective, just because, given it's still retail dominated and it's a market that wasn't around during the last halving, as opposed to trying to, predict prices where, for the most part, the consensus may be, we rally into the halving, Bitcoin outperforms, and then we see some sort of, correction afterwards. Generally, I think for us, we see a bigger opportunity in terms of playing the, the volatility surface in options.
I think the best way to predict is never predict. Luuk, what do you think?
I would really agree with your last comment. If you look at traditional market polls done every year where they ask all the specialists what's the whatever HSI going to be at the end of the year. I think 9 out of 10 would be wrong. So it's pointless to try to predict because statistically you would be wrong. Doesn't mean that I personally would not be bullish. I think the use case and the market entrance, especially the latter, account openings, daily active users, those kind of stats, for Deribit, but for the entire market, proves that there's more and more people adopting and embracing the product, and therefore it should have a positive push for B2C in the longer run. Whether that's going to be next week or next month or 5 years from now, that's difficult to predict. But we see more and more people getting active. So what are they buying? What we see now is that put skew is a bit elevated. So puts are a little bit more expensive, meaning people buy them for, at least that's the way I see it, for protection mostly. So twofold, I think. One is the halving coming up. What's going to happen? Let me protect my assets with a put. But also the market has moved up quite a bit. So who knows? We've seen significant moves in the past. Why not protect me from stuff like this happening? So we see these types of flow. I think in China what we see is also put packaging. So wrapping typical standardized options products for miners or for whoever and selling them as some kind of structured product. So we see more and more demand for firms doing stuff like that, which overall seems to drive put volumes more than call volumes. I think over time this might change, but I think it's more the protective element that drives demand for these products now than the bullish sentiment that might be there. But regardless what's going to happen for price and volatility, our ambition is simply to be the best one in facilitating trades. So what we did recently is move our hardware to London. We have the most state-of-the-art hardware now. We allow cross connects, so you can connect your own service to ours, and round trips from those client servers are less than 1 millisecond, which is extremely fast in the crypto space. So we're quite proud of that, and that's our ambition. Next thing we're launching is bulk orders, as we call it. It's hundreds of orders to be sent and processed at the same time instead of risk check by risk check by risk check. So options market makers have to send a lot of orders to quote, which takes time. And that's the kind of stuff we focus on. So regardless of the price, we simply want to be the best in facilitating exchange of ownership in whatever the product might be.
Always make profits, regardless of the price. Thank you all. For the better future of crypto finance, every one of us has contribution to make to put the derivatives market in the hands of professionals like our guest tonight, rather than just put a old wine in a shiny new bottle as the price of failure could be high. So I hope, thank you guys for joining us tonight. So I hope this show adds a bit of fun to your lockdown life. And remember to sing happy birthday while washing your hands for 20 seconds. And Kuna beers, cheers. Good night from Beijing. Bye,
Thank
guys.
you.
Thank you. Bye.
Thanks.
Bye.
Bye-bye.
Thanks.
Thank you. Bye-bye.
Thanks. Bye.